Hey guys, as we roll into another week of trading here in January of 2022, there's no denying this is a frustrating time for investors. The market's off to one of the worst starts that we've seen for any year for a long period of time, and that's leading to a lot of kind of uncertainty and fear in the markets. So if you're losing money in the market, please know you're not alone, but today I want to show you some of the areas that are strong, some of the areas that are weak, and really 5 charts that are going to help you understand what's going on and where the best opportunities are. And I promise by the time you get done with today's video, you'll feel a lot better about where the market stands and even more confidence about where you can invest and grow and protect your wealth. So let's go ahead and get started. And the first chart that I wanted to show you kind of states the obvious, but this is a chart of 2 of the most important growth groups in the market. And as you guys know, growth stocks have been under pressure this year. The orange line is the ARK Innovation Total Return, which is basically the ARK Innovation Fund is a basket of some of the highest tech, most exciting companies, but these stocks got bid up to just prices that were unsustainable, and then over the last several months they have traded sharply lower. You can see a similar pattern for the Vanguard Growth ETF, the blue line, and really, especially over just the last few weeks, this growth index has traded sharply lower as investors are bailing out of the growth stocks because they're so expensive and they're moving their capital elsewhere. So where is the money actually going in the market? Well, I wanted to show you a second chart here, and this is the Vanguard Value ETF. There's 2 things you need to pay attention to here for the Vanguard Value. First off, let me just let you know what value stocks are. Simply stocks that are trading at a low price compared to the earnings that these companies are generating. And as we've been talking about for months now, value stocks are where the opportunity is. They may sound boring on the surface. You know, some of these stocks like Caterpillar or Ford or GM, they aren't the Teslas of the market. But if you're making money in them, that makes them exciting, right? Even if the companies are doing things that you kind of expect and you understand and you've been looking at for years and years. But value stocks have been moving steadily higher. This is throughout December, throughout the first couple weeks of this year, even while growth stocks have been coming under pressure. So that's a really good sign of relative strength. Now, the last few days of trading, this is basically last week, value stocks came under pressure as well. And they gave up some of their gains, but that just brought value stocks back to kind of break even for the last 3 months and down just a little bit on the year compared to some other stocks that are down so much more this year. Why is this important? Well, basically investors have been throwing out the baby with the bathwater over the last few weeks, or not the last few weeks, just over the last few trading sessions, as people have just kind of gotten sick of this whole market thing and said, forget it, I'm going to take my money out. That's typically what happens at a time when we're likely to see a really good rebound in the market because the sellers finally head out, they're out of the market, and the people who are left are the ones who actually want to own stocks. Which brings us to the third chart that I wanted to show you today. This is a chart of sentiment, and it basically tells us how confident or how fearful investors are feeling. As you can see, sentiment dropped really low back in 2020. And that's, of course, during the most scary period during the coronavirus crisis. And then sentiment moved higher as we started to realize that the market is going to be okay, as investors started making money in growth stocks. And there was a lot of excitement with people investing their money, their stimulus checks in the market, and the market moving steadily higher. Now we've got a situation where sentiment has come all the way back down and investors are throwing in the towels. They don't want to be involved in the market anymore. And believe it or not, for us who are committed investors, that's really a good thing. Because here's how markets work. When there are buyers who are in there buying stock and saying, I'll pay this much, I'll pay even more, I'll pay even more for shares of stock, that drives the market and individual stocks higher. When there are sellers, more sellers than buyers, and they're saying, I need to get rid of this, I'll take $50 for the stock. Oh no, I'll take $45 for the stock. I just need to get rid of it. I'll even take $35 for this stock. That's what drives the market lower, all of that selling pressure. Well, when you get to a situation like we have today, where investors are more bearish than they've been in almost 2 years, that's a situation where the people who are going to sell have now already sold. They've washed their hands of this whole thing called investing. And with those sellers out of the market, that's when we're likely to see the buyers take control and push prices back higher. It doesn't mean that markets can't go down any lower, but it means that we're getting a lot closer to the bottom, and there's a lot more chance that the buyers will take control and push the market back up. One other chart that I wanted to show you kind of on the same level is what we often call Wall Street's Fear Index. This is the CBOE Volatility Index, or VIX, and it measures how much fear there is in the market, and specifically how much traders are willing to pay for option contracts that they use to hedge against a sell-off in the market. As you can see, the last few weeks have pushed the VIX higher, and as the VIX moves higher, it means that people are paying more and more for stock insurance, which means that we're closer and closer to a bottom. And typically, once the VIX spikes higher like this, we see a relief rebound at the very least, and possibly a whole new leg higher with a long-term trend for stocks moving higher. One really exciting thing about whenever the VIX moves higher is that it's perfect for our income on demand put selling strategy, which basically sells insurance to these other traders. So when you sell a put contract, you're agreeing to buy shares of stock at a specific price, and you're getting paid for that agreement. When the VIX spikes higher, it means that you're getting paid even more than normal for that agreement. So this is a time that I really like our income strategy. It has a special way of protecting our wealth while at the same time generating even more income than in typical markets. And then one final area of strength that I wanted to show you, this is the semiconductor chart of the semiconductor stocks, or the semiconductor ETF. And recently we've seen this area pull back just to a really key support area where the 200-day meets with where semiconductor stocks broke out earlier. And I wanted to show you this because while a lot of areas of technology have been very weak, semiconductor stocks are one of the most important and one of the most profitable areas of the tech market. You know, back in the day, they used to look at transportation stocks, and they used to say those stocks would tell us what the overall economy is going to do, because as more people are buying things, we need to transport the things wherever they need to go. Well, today, semiconductor stocks kind of has taken the place of transportation stocks, because the more things we buy, the more semiconductors need to be produced in order to go into the cars, the tablets, the computers, even just the home appliances that we buy. So the strength that we've seen, even just in the last couple months in the semiconductor stocks, has been a great picture for our overall economy. The pullback here gives us some reason to be concerned, but at the same time, if semiconductor stocks are able to find support right here where they are right now, that will give us a lot more confidence in the overall economy and in the overall stock market. So that's an area that I'm watching very closely as we roll out this week. So those are the 5 charts that I think you need to be watching specifically this week. I think there's a lot of opportunity in the value stocks. And if you'd like to know some of the best areas to buy value stocks, I would say take a look at the richretirementletter.com because that's where we've actually already written about some of the key value stocks that you need to be involved in right now. And you can get some good tickers to buy right there. I'd also say keep an eye on my Twitter feed at Zach Scheit, where I'll be posting some charts of areas that I'm seeing opportunities in, some of the risks that we're seeing in the market, and we'll just keep you up to date on what's going on in the market. So please stay tuned. Here at the Rich Retirement Letter, we plan to give you as many opportunities as we can fit into our pages to show where the strength is in this market, where you can invest and protect and grow your wealth despite the turbulence that's coming into this market. So I'm Zach Scheit. Please stay tuned, and thanks for watching.